Thank you, host. It's a great honor to be here and stand in front of you at this first ever ConFEAS. The Federation of Euro-Asian Stock Exchanges is the leading professional association ranging from Europe to Middle East to Asia. I am, in my day job, leading the capital market efforts, capital market development efforts of the EBRD, which is an international financial institution owned by 68 governments and investing in about 40 different markets. We also support the markets through targeted reform policy advocacy, as well as technical support, technical advisory, as well as investment, where we put our money where our mouth is. 200 years ago, Baron Nathan Rothschild said famous words that the capital markets are there to move the money from where it sits to where it is working. And I think no one does that better than the exchanges. We meet the demand and supply. We help the issuers to tap the markets, and we help the investors to put their money into work. So what was said 200 years ago is still true today. I was asked to talk about the developments in the capital market, but I think rather than talking about the past, which obviously matters, but everybody's interested in the future. And I think there are a few lessons that we need to draw from the past and then set our eyes on what needs to be done going on from here. 2 weeks ago, I was at the IMF World Bank annual meetings in Bali. And I think one of the conclusions in Bali was that whilst there has been good economic growth globally over the past few years, what is being seen today is that the growth is increasingly desynchronized. Whilst some of the developed markets, such as the US, etc., have been growing very fast, we have seen that the emerging markets, in turn, the growth has slowed. So at the EBRD, we were thinking, what is the model economy that we would like to create? And what is the role of financial markets helping that economy to flourish? And we came up with 6 key criteria that would perhaps illustrate qualities of a modern economy. The first one is competitiveness. Competitiveness is having alternative sources to funding. Alternatives give you a choice, and choice often gives you a better price. And again, exchange platforms are the ones where the price discovery comes across as market-driven and transparent. The second quality of the modern economy is to be well-governed. And I think it is difficult to argue that the companies that are listed on the stock exchanges have better corporate governance than those that are not listed, in general terms. I think the rules that are set for trading, listing trading, as well as disclosure, are making these companies more sustainable and to tap long-term growth. Thirdly, the economy should be resilient. And nothing proves that better than the global financial crisis that broke out 10 years ago. Whilst many economies dipped at the time, it was those with more developed capital markets that were digging their way out of the crisis faster. The fourth quality of a modern economy is to be integrated. I think we live in the increasingly open world. When I look at the world political maps, then what do I see? I see borders. And I think the world maps are all drawn wrong. Too much ink is spent on the borders and too little on what links the countries together. And the beauty of capital markets is, again, something where you can link together domestic investors, foreign investors, large institutionals, and small retail. And it is the diversity of these markets that creates liquidity. The fifth quality of the markets is to be inclusive. And I often use the term AAA. I don't mean the credit rating here. AAA, the 3 A's standing for products that are available, i.e. products that can be traded, that are supported by the legal and regulatory framework. The second A standing for accessible to all these different investor groups that I was talking about earlier, so that not only domestic but also foreign investors can tap it. And then finally, the third A standing for being affordable. I think it's very important to have a value proposition where the cost is an element that can be met by many. And then the sixth and the final quality of a modern economy is to be sustainable. We heard today about the sustainable stock exchange initiative, and I think the world being sustainable and green, if you want, is something that matters to all of us in the long term. What is that we can do as capital market participants and players and platforms to make use of the opportunities and to meet the challenges ahead? I would point out a few aspects. The first one is we need to deal with the regulatory challenge. Clearly, the regulation is important to create trust towards markets, to protect investors, to create a level playing field, and to preserve the integrity of the markets. Secondly, we need to deal with data. I think stock exchanges are increasingly not just trading platforms, but they gather and disseminate an enormous amount of data. And in today's world, who controls the data controls the markets. One other aspect that we all need to pay attention to is the disruption, in absence of a better word, that comes in from the technology change. Fintech. Fintech is happening. Fintech is sometimes mystified. When people talk about fintech, then they think that these people in front of the computer screens, they come up with something that makes the world very different tomorrow from today. I think fintech is something that is an evolution rather than a revolution. Even though it was said by the Prime Minister of Canada, Justin Trudeau, that the speed of change is faster than what we have ever seen, yet it is probably the slowest that we will ever see again. The world is moving faster, the technology is developing faster, and the technology is supporting what we as financial market participants are delivering. But fintech was not born yesterday. When the banknotes were introduced in addition to the coins, that was fintech, because it was more efficient to carry them. When the first ATM machine was installed back in 1967 by Barclays Bank in London, that was fintech. Internet banking is fintech. When we look at the exchanges today, they are as much technology companies as they are trading platforms. And I think we need to embrace change, and we need to go with it, finding partners as and where we have gaps in our own institutions. And then finally, what I think is key for anyone in the market is to think what is the value proposition that we are making. The range of services, the quality of services, but also the cost of those services. So that's the AAA I was talking about earlier, because I do believe that in order to stay competitive in this disruptive world where new platforms are popping up, and some of the big tech companies, in fact, can transfer very fast, something that we have seen in Asia, in China, for instance. Tencent going from WeChat to WeBank in no time, and then the next day they have 2 billion customers. So the cost of what we deliver and the efficiency of those products that we put in the market, I think, is key. Associations such as ConFEAS has a great role to play in order to create a platform where we can meet, talk to each other, learn from each other, disseminate information, but also create perhaps a collective opinion as to what it takes to have the markets thrive. What is the message we need to send to the governments? What is the message that we should send to the regulators? The regulatory framework has been tightened very significantly, yet sometimes less is more. And I think there comes a point where we say, today we have the markets as we would like to see them, and further change should be very measured and selective in terms of the regulatory environment. Because ultimately the cost, the regulatory cost, is all being trickled down to the end users, the same issuers, the same investors that would need to pay the bills. So there are numerous challenges ahead of us, and I would like to wish all of you the very best of luck in tackling these challenges. There is no one else to blame if you don't succeed. But there is lots of pride if you do. Thank you very much for your attention. Thank you.